Hello, Warriors. Is everyone ready to say goodbye to August? Another day. All the kids will go back to school from the Hamptons, get some volume going. How you doing, Mike? Ran? Hi, Paul. Kman, how are you? Sinatra, Patrick, Ambagil. Okay, Kman's fan right there. Hi, Kurt. Okay, nice, Kurt. I hope you booked it. Nothing's following through. Up, down kind of action we're having here. Okay. So really the last one to make new highs, Aussie right here. I love Aussie, okay? You know, I bought it right before the crash here. So I think we're close to completing here and we're diverging. And I think I'm going to have an opportunity. Just guessing. And the days to come, I'll be able to pick up Aussie around 66.5. So that's what I'm looking for. The dollar, I think it'd have 102.5 if I extend this line out there. Yeah, around there. So that's what I see coming currency wise. And why don't we just talk about NVIDIA since the whole world was focused on it. I think it's coming in lower, but look at the range last night. All
I
right.
mean, we were down 6.5%, 8% maximum last night post earnings, and then
Yeah.
we're only down like 3% right now. Is that where we're at? I haven't looked for an
Yeah,
hour.
this is the last. It's live here. So
Yes.
we're down $5. That's probably about 4%. But I was talking to Jim Welsh, and he's looking for new highs in S&Ps. He said though, if Nvidia gives up this low, there's a big problem. That's it. Okay, so um, that's an important low, probably not just for Nvidia. I'm just saying. Okay, so K-Man's here. I don't know. I don't think Ryan's here today.
No, he's out. Good morning, Dale. Good morning, everybody.
Hey, how are you, brother?
Very good, thank you.
So we're getting this bounce in the dollar from par 50, and euro seems to be the one to be giving up the most. EG is
Yeah,
still working for you.
weaker,
So
weaker European CPI data out this morning. Sent the euro down a bit versus mainly
yeah,
everything
yeah,
for a while at least. But then surprisingly, cable followed suit very nicely. But we are in month-end territory, yeah? And just to make sure that everybody stays light in position, the signals are getting very messy, by the way. So
they are.
I'm not going to make too many bets on what may happen for the next 24 hours unless we get some decent moves on those US data. Um, yeah, but the euro to me looks like we're not going to say we found the top, of course. I mean, if that jobs report comes out very bad next week, we're probably going to see a pop through 112 or at least an attempt to. But I'm still not a big fan of euros, all in all.
Okay, where would you buy a pullback in pound if offered?
Well, I mean, for a starter, 130, 140.75 in cable is a decent level. That zone, that's a
Do-
start. Well, you have your 23.6 is just below there, which
Yeah,
has also been a prior high. So those are already interesting levels, I'd say. Um,
okay.
and then we'll see where we end up. But I I'm not sure I want too many dollar positions going into a fresh month next. So I'm not sure because if we get a jobs report which is not that bad next week, we may all of a sudden see a bit of correction, deeper correction in all dollar pairs.
You have a view on yields at all? We've been moving sideways for a while here.
Well, I mean, ask Powell and ask the jobs report. Once again, I think there's been we're okay here. This is okay for me. I'm not going to say we are going to rebound a lot, but I think the main share of the move on what we have as information right now is the bigger move is behind us, and now we wait for the next set of data.
WTI, by the way, I bought the 61.8 and did a little scalping, but it's still holding the 61.8.
Hmm.
So, I mean, as long as we're doing this, there's a chance for it to go either way. But,
Yeah, either way, that's what you
there's
need.
always there's a chance. Here's my crude will start to move higher unless selling comes in and breaks support. But if support is just a false move, then it could turn back up and go higher. Trade that. Um, anyway, still some hope that constructively, you know, it can turn. We'll see. The 2 week reversal, and something I've taught. I pay attention to the numbers. Sometimes they're very good signals because it's basically about memory to the left, right? So 2 week off number is 76.69. So we're 100 under it. Friday close over that would be constructive. So we'll see. And that's about all I see coming in. Blake, uh, doesn't feel like the S&Ps are still a layup here for
A
new
layup for
highs.
what?
New highs.
Oh yeah, yeah. Yeah, that's that's the so a couple of things regarding that. I mean, Nvidia's obviously recovered a little bit and it's probably going to it's probably going to stay pressured today. I would assume. I mean, the stock you look at, the overall stock. It reminds me a lot of Apple, and maybe Intel in its heyday and Apple in its heyday. I mean, it's a stock, a company that's done extremely well and probably will continue to do very well. And when you take a step back, it can't grow at the rapid rate that is grown, but nothing's changed in its business other than margins are going to tighten a little bit. And obviously they can't extrapolate that type of growth each and every quarter. It's just not feasible. So
So you don't
I
think
think.
this was a dip to buy? You'd
Well,
avoid it. So
I think you can. I don't know if today is a dip to buy. I think that overall, if you see some bleeding in Nvidia over time, you got to be there to buy the dip at some point. And I'm not looking at it close enough to figure out exactly where
okay.
that's at right now. But the point is that I don't think there's anything horrendous happening in Nvidia where it elicits some sort of negative response. I mean, you look at every we were watching all the earnings yesterday. All the companies that reported earnings beat on the top end of estimates, and
Yeah.
CRM and other companies. And then on top of it, I just want to say that we have this inflation data that came out of now. I had the guys over at Trading Floor Audio correct me this morning, and we just get up. I've been up for just a little over an hour and a half now, just trying to kind of get everything in line in my head. We had Spanish CPIs, right? Came in, and then some German regional CPI, and then we just had the German official CPI just a moment ago, right? Is that correct?
Yeah, we had, and all of it was lower.
Yeah, all lower, all disinflationary, which is good. These are the kind of things that support equity markets, at least right now. We're seeing disinflationary data. Central banks, including the Fed, ECB, they could be a little looser. And so if you guys are looking at Nvidia earnings and going, oh my God, it's over, and then the stock market's going to shit the bed, you have to broaden your horizons a little bit and look at the macroeconomic data that's actually pushing us along. I mean, right now, if you're wondering why global equities are rallying at the moment, earnings are good and disinflationary at this point is good. and stocks are responding. So, you know, anyway, Dale, that's my 2 cents here. Now, we also have Steve Volge. He's here, and I'm sure he probably wants to provide a little bit of commentary this morning. Good morning, Steve.
Good morning, mate.
Hi, Steve.
Hey, how have you been, Dale?
Good, buddy. So, what do you make out of what you're seeing on the screen?
For the time being, I'm not paying attention to any of that because I think that the moves we've been seeing unfolding since Friday are, you know, the marketing rebalancing, waiting for the end of, you know, the month flows. And I'm going to be surprised if what happens from there isn't just a continuation of what we've been seeing, meaning a weak dollar and very well bid equities. Although, to be frank, you know, despite the dollar rebound, it's not that we've really seen equities, you know, take a big hit or something. I mean, the DAX earlier today was producing a new all-time high.
Yeah.
So, you know,
like the equity markets don't care about currencies right now.
You know, at least they're not ready to react yet. I mean, in regards to European equities, they do care.
You know, you're the guy. I'm so glad you're here because, you know, we've been talking about this a long time, Steve. Can you foresee a period if we're going to be in a period of prolonged weakness in the dollar with intermittent dollar rallies, time where things differentiate and a weak dollar is not risk on or bullish?
That's how things look like at the moment, right? My only worry about that is that don't think that the other central banks are not going to come soon in the fight of debasing their currencies faster than the US is going to be debasing the dollar. So the only certainty is that there's going to be a mass debasement of all currencies in real terms, right? We have to be a little bit more careful when we're trying to extrapolate longer term trends in regards to which currency is going to be weaker, which currency is going to be stronger against the rest. For the time being, though, yes, we should be looking for the dollar to remain weaker.
Okay. Can the dollar, the question was, can there be a situation where a weak dollar is not good for risk for equities? Right now, it's a tailwind, right? It's a tailwind, right?
It's going to be tough for something like that happening. It will have to be taking place in an uncontrolled fashion. And I don't really foresee that happening because it's in the benefit of nobody. It's in the benefit of most for the dollar to pull back, but definitely not in a way that's going to stoke, you know, fear in the markets, right?
Okay. All right. Appreciate it. So, I know you love the metals.
Oh, yeah.
They're doing
For years,
nothing
I've been
wrong.
loving them, and
Yeah.
you know, I think I've proven my point more than once there.
Yeah.
There is a lot of people that don't realize, right? The gold was trading roughly at $300 this century, right? This century, 2001.
I remember.
Gold has appreciated
Yeah,
more than 8 times since. And I think we're nowhere near done.
my business partner, back when we opened our brokerage firm in 1999, he was like, "I'm buying gold. You guys should buy gold." I was like, "Are you crazy?" It was $300. Yeah, that's crazy.
And that was a central bank.
There's a very good reason of why that has happened, right? I mean, it's not a coincidence. It's not an accident. It's not some kind of a mania or something like that. It's just gold adjusting its price for the real value of money.
Okay. Have you had any kind of conversion with Bitcoin? I know some people that have. That's why. I mean, like Ben
Okay.
Maldonado, he didn't like it. And he
Yeah,
likes it now.
that's a great question, Dale. Yeah, Steve, what do you think of Bitcoin nowadays?
He left, so we know.
I laughed.
I know, but you know, you can't deny the fact that it's still holding up very, very well.
Oh
I
yeah,
mean,
yeah, yeah, absolutely.
and I mean
There is
it
no denying that.
yeah, so
I'm
but you
not
don't
crazy. I'm not blind. But if you're asking me if I'm willing to invest in that instead, for example, of gold, or no, absolutely not.
yeah. All right. Well, yeah, that definitely is a definitely is a as an asset class that is taken. Could you imagine what gold would look like without Bitcoin in the picture? I mean, that'd be a much different story. I do believe that the gold is, or excuse
If
me.
you're asking me, I don't think that necessarily it would be different.
Yeah, why not? You don't think that Bitcoin's taken a store of value from, you know, the younger generations, that say,
The
oh, I
younger
want,
generations don't even understand what a store of value is, if you ask me. I think that the crowd that is investing in Bitcoin, I'll put that in quotes, is mostly people that are doing it for other reasons and not because they think this is how they're going to be preserving.
yeah, yeah. Well, all right. Well, those are, that is a an opinion we'll probably have to debate it at another time when we have more time. Dale, do you mind if I take over the charts really quick
Just
as
one
we?
thing I want to ask you here, Blake, on this Bitcoin here. Can you call that a flag?
I've been looking at it as a flag or a long-term cup and handle, you know,
Okay.
and if it's a long-term cup and handle, that thing's going well over, you know,
Yeah.
110,000, 120,000. So,
Yeah. Yeah.
you know, if that's what it is, if that's what it truly is, or a flag, I mean, you can measure it either way. It's going to give you the same target. So, tomato,
Okay.
tomato, Dale, tomato,
Okay,
tomato.
I get it. I get it. All right. Thank you, bro. Go
No,
ahead.
but the flip side is I would remain, you know, it's constructive, you know, technically.
Yeah.
So you can't like, you know, fight it until it really starts to break below 50,000. I think then it starts to show you, you know,
Yeah.
show you some grit to the downside. Let's you know, Steve, staying along with along the you know, having you here. So the euro slipped today on some inflation data. We had Spanish CPI. I think we have French CPI tomorrow. German CPI just came out, as Kman was talking about. All weaker than expected. Euro slipped below 111. Now I've you know, even on the week ahead video, I thought a dip towards 110.50 would be constructive for the euro, but it does look like it's trading a little heavy here. How do you feel about the euro overall, or maybe the dollar overall? Since we have you here, are you more of a dollar bull, or are you more of a dollar bear at this point?
Against the dollar, against the euro.
I just, yeah, I mean, dollar in general.
Uh, I'm uh, I'm a euro bull in the very short term, but it's not that I like the euro. I don't like it at all. I just think for the time being, in the short term, it has potential to appreciate even further, despite this little pullback.
Yeah, okay. So despite the little bit of a pullback here, now you can see we cracked some support. So that means you're overall a dollar bear.
Yes,
Okay. All right.
but that can change, right? I see
Yeah.
the rest of the central banks jumping in and, going, full tilt on, on cutting rates, quantitative easing, etc. And that is changing.
Yeah. All right. Patrick just asked about the dollar CAD. So I'm gonna give you my 2 cents about the dollar Canadian here. As Dale, we've been discussing quite a lot recently, and you know, with Kman and even Ryan here, that the one of the reasons why the Canadian is strengthened so much is that the lopsided positioning. And I mean, CFTC data is off the charts. Every speculative hedge fund is bearish or has been bearish Canadian dollars, expecting a move to 140. And, you know, here we are going the other direction because the market was so lopsided. I'm going to assume that this Tuesday, or this data that's good up until Tuesday, but we're going to get it tomorrow. I'm assuming that CFTC data is going to show a big shift in, because if you saw like the last 2 weeks, it's kind of started to reverse a little bit. You're going to see a big shift once we flush through 136. Now, I just to clarify here, because I'm just addressing what Patrick is asking. If that doesn't change, I'm going to be looking for, dollar CAD to slip down to 133, this like longer term support. Now, I was long some Euro CAD overnight. I had a 30 pip stop in. I got stopped out. So I'm trying to play counter, meaning that I'm trying to play this move, but I haven't done it with the dollar yet. I'm trying to play a little bit of because I think I think that CFTC positioning is gonna start to even up a little bit. So I will start playing the dollar Canadian to the long side once we get down to some of these supports, if we get down to some of these supports. But it's not just US data in this case. We do have obviously some weekly unemployment claims. We got GDP, preliminary GDP today. Is it preliminary? Yeah, preliminary GDP. And then we have Canadian GDP tomorrow. So and PCE. So there is some data that could move the needle, but it doesn't look bullish right now. It still looks bearish. Let me grab Kman's opinion here, because I'm sure Kman does have an opinion on the Canadian. How are you feeling about the Canadian right now, buddy?
I love Canada.
You
No,
love
I'm not
maple
saying the
syrup.
currency, but I really love Canada, and it's a great country. At least to go on holiday. I think we're in, and I'm going to endlessly repeat that. I think we're in end of month situation, and look at what's happening in the euro commodities, euro, Aussie, Kiwi, Canada, Norwegian kroner, all those things that are related somewhere into some extent in some of the investors' books. They are strengthening for the end of month, and I think once the end of month is over, then we'll probably get a better feel. And I've got like this small impression that we're going to print a low over end of month in all those currency-related crosses. So for instance, Euro Canada, Euro Aussie, Euro Kiwi, all those. So Canada for now, I think is a bit flow driven. Yeah, as we were, and you have been saying, hammering about that, the positioning, and it certainly had a role to play in this move together with the dollar move. Will it last beyond month end? I will reserve my answer for next Monday to start.
All right. Hey, fair enough. It's a tough call. It is definitely a tough call ahead of month end.
Labor Day.
There's low liquidity and things are going to move.
Yeah,
oh man, yeah.
I don't think liquidity plays a huge role in this. It's just that, I think end of month, and and seemingly some kind of delay towards a bit higher oil prices, perhaps as well, or somewhat higher commodity prices. But I think a lot is end of month related, and also just been told as well and reminded, in fact, that we have a big MSCI re-weighting tomorrow as well, and one and all may cause a bit of flows coming out of the blue. So we have to be a bit careful with too strong views on anything going into month end.
Great point. Great point. Well, thank you, Kman. Hey, Steve, I want to go back to you really quick, since we do have you here, and it's nice when you pop in a face. So it's great to have you here. What are your opinions about equities and like what you saw in NVIDIA overnight and where we sit in equities? I mean, we're less than a percent away from all-time highs here. How are you feeling about the temperature overall in equity markets?
I think that equity markets have been very, very well bid. And I don't see a reversal of that trend anytime soon. The market is currently hyped by the by the change in monetary policy, back to stimulus.
The Powell put.
Yeah, absolutely. And I think that's going to remain the case. And I think that once Trump gets elected, that's going to be extra tailwind for them temporarily.
He just said it, Dale. He said it.
Yeah.
Yeah. I mean,
Why do you think it's going to go that way?
I find it unimaginable to go any other way. I've already wagered money on that, actually.
oh man. Oh boy. Here we go. So, that's interesting. And I don't disagree with you, Steve. I think I think the market's going to start looking at it like that. However, there is one thing I do want to point out, and something we talked about last night when I was on the trade-off show with Quasar. He's one of the Spanish analysts over there at Pepperstone, but just in general, September is a bad month seasonally for equities. And obviously we're coming up to not only September, we're coming up to an election year. Fiscally, the fiscal irresponsibility of either side, whether you're talking Democrats or Republicans, and you can argue one's going to be worse than the other, and I don't want to sit here and argue that. I do want to just say that fiscally, either one should allow for more money flushing into the system regardless. So if we do see a dip in the month of September, a little bit of profit taking, do you think that either way the stock market should rally, or would you be, if Harris did take the presidency, do you think it's going to have a negative effect on equities? I'm asking.
In the hypothetical, if Harris takes the presidency,
hypothetical, yeah.
Yes, I think it's going to be negative for equity markets. But as I said, I don't foresee something like that happening.
All right. Well, great to have you here and great to hear your opinions there. Now we have just a couple of minutes before data is coming out. So Dale, I'm gonna start with you. And what are you looking at today as far as a trade setup in the markets, ahead of this? We have a GDP and weekly unemployment claims coming out. What are you thinking?
I'm not doing a lot of trading this week, Blake. I was looking for the dollar to bounce to set up a selling opportunity. I'm still going to be patient. I think there's another 100 points higher than the Dixie where I'll start selling. I'll start buying cable since it's the leader. And but I do think if you want to trade, that there could be a short here in Aussie for a couple hundred pips to the downside.
Wow. All right. You're bearish the Aussie here. Okay. All right. Kman, how about you? What are you looking at today for as far as setups go?
It's the first revision, by the way. It's not the first preliminary number on the GDP, so it's the first revision. We had those first flash numbers out already a little while ago. Setups. We are in this Aussie dollar, right? It's trying this 68 and a quarter zone. I think it may actually go for a little bit of a walk if we get any weakness in any of the US data through the 68 and a quarter would confirm. We may move up to those high 68s before the week is over. That is under the assumption that we may get some weakness in the data. For the rest, I think strong US data, and I'll be looking for any bounce in euro dollar to start selling.
Yeah. All right. And I'm with you on the Aussie, and we've seen the Aussie really recover against the Kiwi overnight, which has been its Achilles heel for the last literally last couple of weeks. And I agree with you on the Aussie. I think the Aussie is really going to start to open up to the upside. Remember, false breakdowns, which we saw back in early August, lead to breakouts, and we're getting that breakout right now. And we've broken a lot of longer term charts. And I also think that the cable, I know a lot of people are looking at it as short. I still like it to the long side. And I think that setups are setups. You got they can be invalidated. So if Sterling gets back above 132.40, it's probably going to take on new highs. Remember, this is a long-term breakout in Sterling. So anyway, the data is coming out just in a second. Let me grab the data flash, and that's in the ForexAnalytix system, so you guys can see that as the data is coming out. And let's go over to these charts, and let's put it over here. All right, how much time? Oh, data should be out.
230 jobless claims, nothing to see here.
Nothing. GDP better than
GDP revised
expected.
a bit higher. Prices revised a bit lower. Strong consumer spending.
So look at the dollar yen. What a spike higher in the dollar yen, actually. That and we're
Yields.
back above 145. So decent data. Dollar is going for a little bit of a ride here. You can see yields are ticking higher, and the S&P likes it. I mean, the S&P likes this decent data. So we are seeing dollar buying coming in. Now, here's the question. Will it be able to sustain being, with some of the end of month flows? I guess we're going to be finding out shortly. Kman, what do you have to say before we turn it back over to Dale?
Yeah, in general, a strong consumer is to be liked, right? So I think that's a pretty good set of data for me.
All right. Well, the dollar is, and we're pushing right into the 101.50 level. This is a pretty key level of resistance as far as the dollar index goes. So just keep an eye on that. And Dale, I'm going to pass it over to you because is your guest here, by the way.
Jerry, I'm promoting you. Accept, please. You declined. So you need to accept it.
Jerry, let me see if I can do that for you really quick. Let me go over here. Jerry Robinson?
Yeah, he's joining now.
Oh, yes. Okay. All right. Very good. All right. Well, guys, I want to say great show today. We are getting towards the end of month, a lot of volatility, and there's going to be a lot of volatility between now and the next 24 hours. So make sure that you guys are inside the ForexAnalytix community. We are chatting all day long. This is a great community, you can see Kman's commentary, all of us talking about, what we're seeing in the markets, how we're playing it. You can jump right into ForexAnalytix.com. And then when you do that, there's a little button right here, right here, where you can go to the chat room, and that'll take you right to where we're at all day long. So Kman, thanks for joining us today. Really appreciate the analysis on the flow show. And Dale, thank you for guiding us every day. And Steve, it was nice having him here today.
Where am I? Where am I? I need a guide. Where? Show me the way, Blake.
All right, Dale.
All right,
it's all yours, buddy. Appreciate it.
All right, man.
It.
All right, I have my back to school haircut, everybody. Want to show you guys picking out my clothes. So, I make an impression at school next week when I go back. Anyway, all right, guys. Enough about the presidential election. Let's talk about what's important, like following the money. And that's what Jerry Robinson does at FTM. He follows the money wherever it goes, into the darkest caves and caverns, into the underworld, into the universe. Jerry, why don't we really just, it's great to have you back, but here's my key question for you. You ready for it?
I'm so ready.
What aren't you long? What aren't you long?
The dollar. Unfortunately,
okay,
I guess
all right, good. You came up with something. All right.
Yeah.
Anyway, Jerry, great to have you back. I know you're disciplined. That's why I asked you that. There aren't many bearish charts or sectors out there. It's
not too many.
Yeah.
Yeah, not too many. We were just talking about that yesterday, how back in the last chance we really had to get nice and bearish was back in 2022. Yeah. And we, just real quick, there does seem to be a lot of chatter about us being near a top, and a lot of it having to do with the fact that the rate cuts tend to coincide with the economic slowdown. Yeah. And that therefore somehow that's going to lead to some sort of blow off
recession.
Top. Yeah, of course, recession, and then some sort of blow off top in the market, melt up.
What kind of numbers are you hearing? I mean, I've heard anywhere from 6,100, which I've heard for a while, up to 7,000 S&P.
Yeah, well, that aside, I mean, I think that's probably possible, but to me, that this looks like a classic. And you brought it up last time, and you nailed it. It it sounds like a recency bias issue, and let me just briefly explain because
Well, you
back
want to
in
share your screen so we have a
oh
visual
yeah,
at
you
the
bet. Let
same
me do
time?
that. Well, they're
Yeah.
staring at you.
Okay. Yeah, recency bias for 10 years, right?
Right,
20 years.
exactly. It's
So
so
it's
true.
almost historical bias now that
That's
keeps
right.
being reinforced. Uh, why do you see some things that don't make sense to you?
Yeah, well, and
Like valuations or what?
well, I think some of the valuations are definitely stretched, but I think that the risk is that we end up in a situation where we fight the Fed. You know, one of the biggest rules is don't fight the Fed.
Yeah,
And right,
hardest
and
fight.
right, yeah, and as far as as far as we see, right now where we stand, yeah, the economy is certainly slowing down somewhat. Some of the evidence can be seen in some of the consumer discretionary outlets. Even like I'm an investor in Lowe's, and so I'll go in often and I'll just check and say, "Hey, how's business going?" And over the last month or so, in Lowe's, it's been really, really slow, and a lot of it has to do with the interest rates, the mortgage rates that have just kind of stifled activity in the housing market. But, the Fed is telegraphing that they're going to lower rates and that they're going to begin cutting rates, not just this year, but well into next year. And what I've seen over and over, Dale, and you probably have too over the years, is that and the reason I speak like this is because I'm coaching. I'm coaching and mentoring traders, and sometimes you gotta slow them down, and you got to say, look, don't end up fighting the Fed. Back in 2022, it was so obvious the market was going to go down. I mean, the dollar was going up, inflation was going up, rates were going up. It was very clear there was going to be a lot of pressures upon equities. And so, in a year like 2022, the best thing you could have done is you could have either A, been short, or B, if you don't like to be short, you could have been taking advantage of the opportunity by picking up great quality, high quality companies as they got trashed, kind of like NVIDIA. That was our strategy in 2022. NVIDIA had been left for dead. We said, hey, let's accumulate NVIDIA in 2022. This is a perfect time to do it when everybody hates it. It was one of the rare times that you actually had NVIDIA on the monthly chart below its 50 RSI. Well, that's a gift typically on that chart. Well, anyway, as we go now into 2024, we have the Fed telegraphing that the market is, that they're going to cut rates. And so what this means is it's the exact opposite. It's going to put pressure on the dollar, as we see here on the chart. The dollar has been resilient despite the expectation of rate cuts. And we've finally begun to see the dollar, concede some of those gains and that it had pretty much all year long. So we're back down in that 100 to 101 support level area.
Okay, that's good reporting. What do
Yeah.
we do from here?
Yeah.
You know, I
This,
mean,
yeah.
to me, I said the dollar had spoken. I've been talking about a bear market in the dollar for about 3 months now.
Mm-hmm. Mm-hmm.
So, to me, and this was a target zone at par 50. Par 50 is people won't be able to say the dollar's neutral anymore when we take that support out.
That's
Do you,
exactly, that's
do you
right.
think that's going to happen?
I do. Yeah. And in fact, let me show you, there's two major, well, there's one major chart I'll show you here on the dollar, and it's a kind of an arbitrary number, but one of the things I learned early on was that you could find those, what I call, and please forgive the language, but it's like a magic moving average. You can go back, and if you spend time with the data, you'll start messing around with different moving averages, and you might find one that adapts pretty well to the price of different assets. One of the ones that I really like to use on the dollar on a monthly chart is the 36 monthly moving average. And that
Okay,
one,
yeah.
and that was, we actually, the last time we broke out or interacted with that was back in 2021. This began, of course, the
Yeah.
big rally. Well, we came down and held that quite a bit, but we just violated it on the monthly candle in August, and so it looks like we're going to close below it. So signals to me that we're definitely losing steam finally on the dollar. And
We're
then
going
this,
back. If you go back to that chart, Jerry, I have
yeah,
longer term objectives right at your 90 level.
yeah, right, exactly. And that looks like this particular chart here, where the 93.50 level is where I would envision the dollar eventually gets back to. That's not
Okay,
that
that's
that's
nice.
not an unusual area, but that'll provide a lot of lift for equities. It'll provide a lot of lift for gold and silver and some of those other assets as it gently comes down. I expect it to be a gentle decline, two steps down, one step up on the way
Yeah,
down, maybe.
yeah.
But
No crash. No, so
no, I hope not.
a controlled descent.
Yeah, I hope so. I mean, that's what I would prefer for the dollar. But coming back down to about 93 or so, I can see it in that range. Maybe even getting down below that area a little bit. That'll put us. And we haven't been oversold, on the dollar since since 2020, as we can see here on the chart.
Yeah.
But so the dollar is one thing we're definitely looking at. We're very, very glad to see that the market is understanding that those rate cuts really are coming, and you can tell from this dollar that we've really lost a lot of that steam as the recognition kind of comes in. The same thing in bonds. When you look in bonds, we certainly have seen rates come down, but you haven't really seen the flow into those some of those. Although fixed income has seen quite a few inflows, but we just haven't seen the kind of flows that I think we will see. There's a lot of money on the sidelines still earning 4 or 5%, and as those rates come down, we see that as a net benefit. The net beneficiaries will be utility stocks, real estate stocks, and several other areas.
All right, so let me ask you a bit about that because they're defensive. There's
Yeah.
been a big rotation into staples, utilities, rate
Mm-hmm.
plays. The XLF is making new all-time highs. Well, no, not new all-time highs, but making new 52-week highs.
Yeah.
Does that tell you anything about you know, uh, the fact that people are buying gold and bonds,
Yeah.
and selling the dollar is kind of like a recession? They're saying one thing, and the market saying another thing.
Well, the way I look at it is a lot of the selling pressure that we saw that happened occurred in 2022, and that was due to savvy people just saying, look, I'm just in the market when it goes up. I don't want to be in here now. And so there was a lot of people who just skittish money that left. You also had money that just said, look, I don't want this. I can get, higher interest rates. So a lot of the money moved out in 2022, and a
Right.
lot of that is still sitting on the sidelines. And when that money comes back in, that money was already skittish to begin with. So it wants utilities. It wants, it's there for the
Right.
income. So there's a lot of income seekers that are going to come out of the banks as rates come down, and they're going to go into the markets. And real estate is one of the best sectors, in my opinion, for those who are looking for opportunities. It's been beaten down so much, incredibly, and as well as utilities, which are enjoying that AI boom premium because they're in such demand. I I also think Bitcoin is just about to break out. I know that it's been kind of strange watching Bitcoin here interact with its 200-day moving average, especially in the wake of the halving. Typically, you would think that the market would be rallying by now and that we would have some sort of, breakout to the upside.
Mm,
Uh, I
oh,
I
sure.
have a I have a chart I'm looking here for. Let me see if I can find it. It's a Bitcoin halving chart history, and let me see here. Here it is. I think this is it. Uh, there it is. Okay. So can we talk about Bitcoin for a second, Dale?
Sure. Yeah.
Because I'm sure your folks, many of them are probably looking at Bitcoin as well. One of the things that we were looking at with Bitcoin is say, after the halving, how long does it take for that thing to take off? We know that in the post-halving era that Bitcoin goes up. But just a few data points from this chart that I had made a while back. We've been using this chart here for years, but we recently updated it with the fourth halving. And as you can see, on every one of these last several halvings, it takes 18 months to get to the peak from the month of the halving. And so the second halving on this chart here, as you can see, was back in July of 2016. And that month was a down month for Bitcoin. This is a monthly chart. All the candles are months. And so that was a down month. The halving in 2020 of May was also a red candle. So it was a down month, that halving. And then when we look at the fourth halving, which was back in April, that was a down month. So typically the halving months are down months. Then when you look at the remainder of the candles and say, well, what else can we extrapolate from this? When does this thing typically begin to move? Well, we see the second halving here. We got 1, 2, 3, 4, 5 candles where they're very small. By month 6, you've got to break out a pretty big candle there on the move. So it seems by month 6 on the first halving. How about the second one? First one's down. Second one's pretty nice move, but it just really kind of hangs out. It finally begins to break out. 1, 2, 3, 4, 5. 1, 2, 3, 4 on month 5. By month 6, you're on the go. Now we look at where we're at today in 2024. Say the halving happened in April. Well, that was a down month like all the others. But what about the following months? We got 1, 2, 3, 4, 5. So we've had 5 where we've gone sideways. We got lower wicks here that were rejecting those lower prices. So what that tells me on Bitcoin, for those who follow that market like we do, is that using the pattern here, if the pattern holds, then by month 6, we should be clearly on the move. And what I mean by that is by month 6 from the halving, we should be at a place where we're at a new high. Yeah, we should be at a new high. So in other words, my forecast on that would be based upon this pattern that over the next 60
Never seen that
days
before. Yeah.
yeah,
like
yeah, no. Over the next 60 days, we'll see a new high on Bitcoin just based upon that. And then the other thing I want to show your folks, this can be applied to any chart. And I know many of you guys use technical indicators out there, but just that monthly RSI on the monthly candle, study that monthly RSI on your charts. You know, whenever you look at a chart, look at the monthly view and then put that RSI on and just see where that RSI tends to peak on the rallies. And you'll notice on Bitcoin, the rally tends to take us up to about 90 to 95. That's usually where a really strong asset will resolve on the monthly RSI before it ends. And as you can see here where we're at now, we're at 61 on the RSI. So we have plenty of room to the upside. I'm not bearish at all on Bitcoin here, very bullish. And those are some of my reasons. So anyway.
Okay, interesting. So bullish Bitcoin, you have been for a while, Jerry. Bullish metals, bullish the market.
Bullish on NVIDIA.
Bullish NVIDIA. Okay, last night's low was important. How about oil? Where are you at on oil?
Oil has been holding really tight in some areas that we like. In fact, I got a chart here that I'll show on oil. Sorry for the headache there from all the scrolling.
What beautiful charts.
Oh,
really
yeah, thank you.
Nice looking work.
Thank you so much. I appreciate that. That means a lot from you, brother. So West Texas Intermediate, we look for a level of around 75. We kind of consider that to be now, many of the producers out there, from my understanding, this may be wrong all the way across, but just a general understanding is that many of the producers out there need $55 oil to be profitable. And so 75 is usually plenty of margin for things to be healthy in the energy market, but at the same time not be outrageous for consumers. So I like where West Texas currently is. I don't have any projection. It looks like it's just been kind of tightening.
Yeah, it's like a coil.
Triangle. Yeah, you kind of see that triangle going on. Same thing with Brent. We look for that $70 to $85 range.
So basically, you're neutral until we get a resolution of the triangle, and then you'll get on it. I know
exactly.
How you are.
Right.
I know, Mike. You know the number one rule in the business when you came into as a broker: know your customer.
Know your exactly.
I know my customers, Jerry.
That's right.
All right. So silver still looks great.
We think silver's fine. We had that nice monthly breakout back around the $25 level back earlier this year. That was the big triangle we were waiting for, and that had been for years in the making. And we got that nice breakout on the biggest volume we'd seen in years. So we knew, hey, this really means something. And also, let's see, on silver, the $29 range has been pretty key. We got that rising 200 weekly moving average down to about 24. I don't suspect we're going to come down that far. And I think as there does seem to be a lot of gloom. It could be the election season that we're in. That could be adding to the gloom. There's obviously inflation pressures that are coming down. There's that recency bias that remembers many of those issues, which is also hampering. When I look at the state of the economy, and I see the complaints from the average American, it's difficult to know what the source of it is, whether it's some sort of belief that the economy is bad, and so therefore they say that it's bad, or if they really are. And I know many people are feeling this economy. Don't get me wrong. I know that it's been very tough, but in reality, we have so many metrics that indicate to us that if you're investing in this market, if you are being smart, if you're buying the S&P 500 in your 401k, if you're just buying basic assets, if you're buying real estate, if you've been doing that over the last several years, this economy is actually pretty darn good for you.
Yeah, but that's like 10, that's 10%.
Yeah, if you don't own assets, which is sadly, the majority of
Right, so
folks,
it's easy to understand
it's
how.
tough. It is easy to understand where they're coming from on that.
Yeah, because
But
they're savers instead of investors if they save, and they've been squeezed on everything they pay for.
they have, and they haven't been taught how to invest. We have very poor financial education, and so they haven't been taught the importance of it. In fact, when you get on social media, Dale, you know this, you see a lot of sarcasm, you see a lot of cynicism, even around investing, like even the things that can help. You see that many of the exit doors have been kind of closed and locked, and so the point is that the reason I say all that is that as we look at where we're at now with this political situation, there's a lot of angst. I suspect that many of the things that we're facing are largely temporal. The rate rotation, that's temporal. The unwinding of the yen carry trade, that's temporal. Some of the other things that we've been seeing in terms of the growth scare, well, that's kind of temporal. And so hopefully we're moving through some temporal things and we're going to resolve to the upside. When I saw NVIDIA earnings yesterday, I knew that this thing is nowhere near over as far as the rally in terms of the AI boom. You and I, Dale, haven't seen the best app that comes out of NVIDIA chips. NVIDIA hasn't released its best chip. We're still years and years and years away from all the advances that we're going to see. So when I look at some of the opportunities here, I see abundant opportunities for those who are wise and diversified. Maybe I'll say this too, is that when it comes to stocks and those listening out there, stocks are just one aspect of a financial plan. So you don't have to swear stocks off or say stocks are great. You can just have a little portion of your money in stocks and a little portion of your money in bonds and a little portion of your money in gold, a little portion of your money in real estate, a little bit in Bitcoin. And that way you stay nimble in the event that the rules of the game change. And the rules of the game are set by the IRS. And they change the rules. So if you get all piled up in gold and they change the rules, well, that's no fun. And if you get all, piled into real estate and they change the rules, well, that's no fun either. So the best advice I give to our members and folks is that in this environment, especially if you're skittish about what's in the future, just, cast your bread upon the water 6, 7 different ways and, learn to diversify and, but don't swear off entire asset classes, without knowledge. And for some people, they shouldn't be in stocks, and for others, they probably should be. So,
Are you a certified financial planner?
I am.
You talk like one.
Well, I became an advisor in 2008. I got my life insurance license in 2007, 2008. And I have we do refer out to financial advisors, but I absolutely love the financial planning strategies that we produce here at Follow the Money. And strongly believe that everybody needs a financial plan. Yeah, absolutely.
Arnie is saying, how about swearing off NFTs? Look what
Sure.
happened there.
I'm okay with that. I think it's okay to swear off NFTs.
Oh, okay. All right. And so, Jared, why don't you show the people and a lot stuck around for your, you've been pretty good about this diversification and pretty bullish most things. Uh, the dollar is probably the newest event since our last conversation.
I think
You were,
so.
yeah, you were constructive everything last time, and the dollar wasn't. I don't think you were sure about it. A lot of people weren't, but now you are.
We were pretty sure that it wasn't going to go above 106 to 108. That was our main.
Okay.
That was our main, point.
Yes, all the interviews are recorded, Arnie. Okay, so go ahead, Jerry. Show people where they could find followthemoney.com and what kind of model you have for them to get involved with you. And I think that your demeanor and what you said today um, makes a lot of sense, and that people should do it um, because that was something, I may be a good trader, but I wasn't the greatest financial planner.
Mm,
So if you think about if I had it to do over, especially people out there that are younger, and it's never too late to start, but to have that plan and not just think you're going to hit home runs in the
mm.
markets all the time and
Well, that'll preach.
not plan for when you're, later,
Yeah,
make
so
plans for
true.
later.
So true.
Because later comes,
Yes, it
I'm
does.
witness to it. Okay.
You will meet your future self. You will meet your future self at some point, and you want to bring a bag of money when you show up, and the thing is
Here,
you know what I mean?
here's later.
Right.
Okay. You want anyway, so really important for
It
people to do.
is. Whenever I first got started back in the mid 90s as a trader, I thought in terms only of trading. And so I didn't
Right.
think in terms of like, oh, I also need an investment plan. I mean, I didn't even think
Yeah.
about it. I thought suckers had investment plans. I was the smart guy. I was the trader. It was
Yeah.
later that I realized, wait a minute. I've got to have two hats. I've got to be an investor and a trader, and that was like a dawning moment. Oh,
Yeah.
it's like, oh, and so I remember that, and I realized, wow, I've got to tell more people this, because when you learn to trade, you think, well, that's the way you encounter the
Amass
market
wealth.
all the time. Yeah, that's the
Yeah.
only way to do it.
Right.
And so
Right.
we got to combine investing and trading. And really quickly, I know we're out of time, but what we do is we teach that. We teach that here at followthemoney.com. You can come over to followthemoney.com, and when you do, you can become a member here, join the club. And when you do, you get access to all kinds of stuff. We give access to you to a daily swing trading idea we put out by email. We also, every night, we give you all the newest swing trading ideas, position trading ideas, long-term investing ideas. We have top trending stock lists, momentum stock lists. We have ETF leaderboards and crypto leaderboards to keep you posted on what's trending, because we do follow that money. As you well know, we have tons of courses here for you, whether you're a swing trader, position trader, long-term investor, crypto investor, options investor, whatever, or options trader, whatever it is. We have a software here that you can actually use for, it's a trend trading software. And so we've developed our own software here, Profit Tracker. And we just encourage folks, and we have a weekly webcast where we educate folks. I mean, there's just a ton behind the paywall you wouldn't imagine, but there's a lot of stuff for free too. So if you just come to followthemoney.com and just start kind of kicking around, you'll find free podcasts, free videos, free resources, downloads, PDFs. We're here to educate. And every opportunity we have to come on ForexAnalytix with you, Dale, is an opportunity for us just to share some about the markets, but also to let people know that if they want, the more education, that's what we love to do. That's what we've been doing since 2010, and we just love the opportunity to serve folks and help them kind of turn the light bulb on, and kind of see and make plans for the future and seize it with some confidence.
Okay, Jerry. Well, it's a skill that I urge people to learn how to do both. And if you can't do both, you can find someone to help you with the other, but just because you can't doesn't mean you don't need it. Okay, so thank you, Jerry. Thank you, brother. My trading warrior brother, Jerry Robinson, everybody.
My pleasure. Thank you.
Yeah, Jerry, we'll talk after the election.
That sounds great. Look forward to it.
And appreciate you coming here and sharing your work with us it's been a few years now. Thank you very much.
Thank you so much. Appreciate the opportunity.
Okay, follow the money. What, there are other things to follow, but in this world, in the world, follow the money. Also, follow your heart. And, I won't say it. All right. Follow God. And I'll see you guys later. Have a great rest of the day. We'll wrap it up for TGIF. And I'll see everyone tomorrow. Don't just count your pips and Bitcoin and shares and silver and everything that's going up. The whole world is going up. Just be long the world. When the dollar's bad, you could be long the world. We'll see how long it lasts. Always be ready for anything and everything. Adios, everyone. Thanks again, Jer.